Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Welcome back. In today's lesson, we will be diving into the CXC Accounting Unit 2 2021 Module 1 response. Specifically, the areas to be covered are inventory valuation for the FIFO and LIFO method, cost allocation versus cost apportionment, and the step-down allocation method. This question is an important part of your preparation for the upcoming exams as it tests your understanding and application of key accounting principles and concepts. We'll be examining the question requirements, discussing the approach to tackle it effectively, and providing a detailed explanation of the ideal response. Now, before we begin, make sure you have your resources. This lesson will help you grasp the necessary knowledge and skills to excel in this particular question. All right, let's get started by looking at the first part of the question, which asks us to outline three differences between the first in, first out, and the last in, first out inventory valuation methods. Now, three differences between the first in, first out, and the last in, first out methods are, and we begin by looking at the first in, first out. Under the first in, first out method, it is assumed that the items that are acquired or produced first are the ones that are sold first. So the oldest items are sold first. Under the last in, first out method, the assumption is that the most recently acquired or produced items are sold first. So the newest items, the newest inventory are sold first. Under the first in, first out method, it tends to result in a higher valuation of the ending inventory simply because the cost of the most recent purchases or production is assigned to the inventory. Basically, under cases where prices are rising, you find that what you purchase first, the cost to acquire those would be cheaper than what you would spend on the most recent items. And because you are selling those items that were purchased first, those would have the lower cost. So what will be remaining in the business are the ones that you have purchased at a higher price. So therefore, your ending inventory would be higher. While under the last in, first out method, it generally leads to a lower valuation of the inventory because the cost of the oldest purchases or productions is assigned to the inventory, and that is your ending inventory. Now, under the first in, first out method, it typically leads to a lower cost of goods sold as the older, lower cost items are considered to be sold first, meaning the cheaper items are sold first, and that would be the cost that would be assigned to your cost of goods sold. And under the last in, first out method, it generally results in a higher cost of goods sold as the most recent higher cost items are considered to be sold first. Now we're going to look at the other part of the question where we are presented with some information as it relates to Trelawney Inc. And we're asked to compute each of the following costs at 30th of May 2019 using the first in, first out method. Now the costs are ending inventory and cost of goods sold. Now, in order for us to do that, we have to examine the question. And Trelawney Inc. uses a periodic inventory system. The company reports the following for the month of May 2019. Now we're seeing that May 1st, there was opening inventory of 120 units at a cost of $5 per unit. May 12th, there was a purchase of 370 units and the cost per unit is $6. May 23rd, there was additional purchases of 200 units and the cost per unit that the business paid to acquire those is $7 each. And the ending inventory at May 30th is 230 units. And we're going to use this information to complete the question. Now, before we get into our response, we have to tear this question apart in order to determine what we have left. remember that the business uses the first in, first out method. So it simply means that the items that the business would have sold first would start from May 1st, then May 12th. If they need more, they'll take it from May 23rd, etc. Right? No. So this is the order in which the items were sold from May 1st down. Okay? In terms of the question, we're seeing that we have ending inventory at May 30th of 230 units. Now, in terms of this, we need to determine where this 230 units would be remaining. In that, do we have the 230 units from what we have purchased first, or those 230 units would be a part of what we have purchased last? Now, because we're using the first in, first out method, and we are selling from what came into the business first down to what came into the business last, it means that we are going to be having stock remaining from the bottom, what came into the business last. So what do we have remaining that would comprise the 230 units? So we're going to be taking our stock from bottom up when you are valuing your inventory using the first in, first out method. So what we're seeing is that we have goods remaining from the bottom, and if there is anything that we need more, then of course we would go up to the next set. So in terms of this, we have 230 units remaining. It means that the purchase that was made on May 23rd of the 200 units, we still have that in stock because those were not sold, and the value of each of those units is $7, right? So we have the 200 stock remaining. But remember, the question told us that we have 230 units left. Now, the additional 30 units will be taken from the purchase that was made on May 12, and that unit would be 30. Okay, so what we're seeing is that the units that we have remaining comprise of May 23rd, 200 units, and we have 30 units remaining that were purchased May 12, and the cost per item is $6. Now we're going to use this information now to do our calculation. So we're going to look at our response. So we have the 200 units, and the value of the 200 units is 1,400 because the cost per unit is $7. And we also have 30 units remaining where the cost of the unit is $6, and that amount is $180. Now in total, our ending inventory under the FIFO method is $1,580. Now that we have calculated the closing inventory using the first in, first out method, we're going to proceed to calculate the cost of goods sold. And remember, in calculating cost of goods sold, it is simply opening stock, add purchases, less closing stock. So from the question, we have opening stock, and the opening stock is on May 1st, total number of units, 120, and the cost per unit is $5. And we're going to enter that in our workings. So it's Trelawney Inc., cost of goods sold for the month ending May 2019, and we are picking up our opening stock. Remember, it's 120 units. The value per unit is $5, and the cost per unit is $600. Instead of showing the workings too, you could just simply pick up this value from the total cost column for May 1st. Now we're going to proceed to add purchases because we have our opening stock. And remember, there were two sets of purchases. So from the question, our first set of purchase was made on May 12. Total number of units purchased, 370. at a cost of $6 each. So we are going to enter that in our workings, 370 multiplied by 6. And instead of doing this, you could simply pick up the value from the total column, which is $2,220 for May 12 purchase, and we have $1,400 for May 23rd purchases. Okay, so let's proceed back to do our workings. So our total purchase is $3,620. When we add the purchases to opening stock, we get a value of $4,220. Know that we have that. And basically, people, this figure is called our cost of goods available for sale. And from the cost of goods available for sale, when we deduct our closing inventory, which we have calculated earlier, where we determined that the closing stock using the first in first out method is $1,580. So there's no need for us to calculate that again. So we're just going to simply enter the $1,580. And when we subtract our closing stock from the cost of goods available for sale, we get cost of goods sold of $2,640. So for that question, we have calculated the closing inventory using the first in first out method, which is $1,580. And we have also calculated the cost of goods sold under the first in first out method, which is $2,640. We are now going to proceed to the next part of the question, where we are asked to compute the gross profit for Trelawney Inc. using the first in first out method if the items sold during May were at a sales price of $11 per unit. Now, in order for us to calculate gross profit, remember it is simply sales less cost of goods sold. And we have already calculated cost of goods sold under the first in first out method. So let us proceed to do the workings for this question. So it is Trelawney Inc. gross profit for the month ending May 2019. And remember, what we're going to start with is our sales. But we did not get the number of units sold, so we have to proceed to do our workings for that. So units sold is simply units available less the closing inventory. That would give us the units sold. So let's go to the question to pick up the units sold. And we're going to begin by picking up the opening inventory, which is 120 units that we are going to record in the workings. So opening stock, 120 units. We are going to also pick up the purchases. And in terms of the purchases, there were two sets of purchases, May 12, which is 370 units, and May 23rd, which is 200 units. And we are going to enter that in the workings. So purchases for May 12, that is 370 units, and May 23rd is 200 units. When we add our opening stock and our purchases for the period, there was a total units of 690 units available for sale. However, there was ending inventory, and the ending inventory was calculated based on the question to be 230 units. So we're going to subtract these 230 units from the units available to give us the units sold for the period, which was 460 units. Now back to calculating the sales. Remember, the question indicated that the price per unit, the selling price per unit is $11. So we're going to use that information to generate the value of the sales. So our workings is simply the 460 units that were sold multiplied by $11, and that gives us a value of $5,060. From this, we are going to subtract the cost of goods sold. Now remember, cost of goods sold was calculated in our previous workings, where we determined that the value of the cost of goods sold is $2,640. We're now going to use this information to complete our workings for the question where we're asked to compute gross profit for Trelawney Inc. and the cost of goods sold is $2,640. This is now subtracted from the sales value of $5,060, which give us gross profit of $2,420. Now that we have calculated gross profit, let us move into the next part of the question where we're asked to compare the impact on the gross profit of an enterprise using the first in first out and last in first out methods during periods of inflation. During periods of inflation, a firm using the first in first out method would find that there is lower cost of goods sold, which would result in an increased profit as the first in first out leaves the newer, more expensive inventory in a rising price environment on hand, meaning the closing stock. So note briefly that the inventory that was acquired at a lower cost were sold, and those were used to value the cost of goods sold. Because remember, closing stock and the cost of goods sold are valued at cost price. Let us look at last in first out. Now, a firm using last in first out method would notice that the current cost of goods sold would be higher because the new inventory would be more expensive. As a result, the company would record lower profits or net income for the period. Now, in terms of the effect of first in first out and LIFO on profit, notice that under the first in first out, there is increased profit, while under the last in first out, the profit would be lower. Now, in terms of tax obligation, if the business uses the first in first out, it means that they'll be paying more tax when compared to that of the last in first out, because the profit under the first in first out would be higher than that of last in first out. So remember, the more profit that you report, the more tax that the business would generate. Okay, now let's move into the other section of the question where we're asked to outline the two main differences between cost allocation and cost apportionment. Cost allocation versus cost apportionment. Under allocation, we find that it's the process of assigning costs to specific cost objects such as products, departments, projects, or activities. So the cost is allocated to a single cost object, a specific cost object. It involves identifying the direct costs that can be easily traced to specific cost objects and assigning them directly. Indirect costs are allocated using allocation basis or cost drivers such as direct labor hours, machine hours, or square footage to distribute the cost proportionally to the cost objects. Now, under cost apportionment, this is a process of dividing costs among multiple cost centers or departments within an organization. So while cost allocation assign the cost to a specific cost object, we find that under cost apportionment, the cost is divided among two or more cost center or departments within the organization. It involves dividing common costs using predetermined criteria such as the proportion of direct labor costs, direct material costs, or machine hours for each department. The goal is to allocate the shared costs based on a reasonable measure that reflects the relative benefit received by each department. So that is cost allocation versus cost apportionment. Alrighty, so we're going to move into the last part of the question, which reads, Tops Manufacturing Corporation operates a manufacturing plant with 2 production departments, blending and packing, and 2 service departments, a common canteen facility, and the warehouse. Information associated with the manufacturing plant is shown in the table below. The company allocates the cost of the service departments in the following order. Canteen is based on number of employees, and the warehouse is based on the number of orders. Tops Manufacturing Corporation uses the step-down allocation to allocate service department costs, and you are required to calculate the amount of overhead costs that will be assigned to each production department. So remember that the business uses the step-down method to allocate service department costs. And bear in mind that the canteen must be allocated based on the overall number of employees, while for the warehouse, that is based on the number of orders. Now, in terms of how we're going to start stepping down the allocation of the cost, we will start from the canteen first. Okay, so we're going to be looking at our workings for that. And the first thing that we need to do is to create a table, and we're going to pick up the allocated overhead for each department first. Okay, so we're going to pick up that information, enter that information in our workings first. So it is Tops Manufacturing Corporation. Remember, the centers are blending, packing, canteen, and warehouse. And we're going to begin, as I indicated earlier, with the allocated overheads, which came from the question. So in the question, we're seeing that blending is $935,000. So that figure must be entered. For packing, going back to the question, packing is $547,000. So entering that, 547,000. Back to the question for canteen, and we're seeing that canteen is $80,000. Entering that in our table, canteen 80,000. And for the warehouse, we are seeing that the figure for warehouse allocated overhead is $225,000. So this we're going to ensure that we record. So warehouse, $225,000. Now that we have our overhead cost, we're going to proceed to start our allocation. And again, just a reminder that the allocation is based on the following order. We begin with canteen, and it is based on the overall number of employees. So in our response, we need to indicate that we are allocating the canteen first. And in doing that, having written allocation of canteen, we're going to show that we're reducing the canteen of its allocated overhead, and that is to show the $80,000 in bracket. And this $80,000 is what we're going to share among the other cost centers. And we need to go back to the question to get our details in terms of how we are sharing. Now, based on that, we are using the number of employees, where we're seeing that blending is 145 employees assigned to that department, packing as 45, while warehouse as 10. Now, each of these numbers will serve as a numerator in generating that fraction that we're going to use to allocate the canteen costs among the other cost centers too. So for number of employees, we have 145 employees in blending, and that's the numerator for blending. However, the total number of employees working in the organization would be the 145 plus 45, which gives us 190, plus 10, which gives us 200. So our denominator is 200. We are going to proceed to look at our workings for the allocation of the canteen using number of employees. And we're going to begin with the blending department. So it is 145 employees in that department divided by the total number of employees multiplied by the cost that we are sharing, and we get $58,000. This we're going to enter in our workings. Allocation of canteen to blending is $58,000. Now we need to look at packing, but we need to go back to the question to get the details as it relates to packing. Again, there are 45 employees in that space, and this is the numerator. And we are going to proceed to look at our workings for that. So for packing, it is 45 divided by the total number of employees multiplied by 80,000. That's the cost that we're sharing, and that is 18,000. Let's enter that in our workings. So packing is 18,000. Now we're on to warehouse. And for the warehouse, again, there are 10 employees in this department, and we are going to use that as the numerator in doing our workings. So warehouse 10 divided by total number of employees of 200 multiplied by the 80,000, and this gives us $4,000. So for warehouse, allocated costs coming from the canteen is 4,000. Now, we are going to proceed to adjust the balances after the allocation of canteen. And for blending, we have a total of $993,000. Packing is $565,000. The canteen, we have no cost remaining in that because that was allocated. And warehouse now stands at $229,000. Now that we have done the canteen and we have indicated the adjusted balances, we are now going to proceed to the allocation of the warehouse. Now the warehouse has a value of $229,000 in it as overheads. So this is what we're going to share between the two cost centers, blending and packing. So we're going to reduce the warehouse of that cost by showing that in bracket, $229,000. And we're going back to the question to get our details as it relates to how we're to share or where to allocate the warehouse cost. And the warehouse cost is to be allocated based on the number of orders, where we see in the question that the number of orders for blending is 160, while for packing that is 90. Again, these figures will serve as the numerator for each center, and the total, which is the 160 plus the 90, which gives us 250, will be the denominator in generating the fraction that will be used to allocate the cost to the departments. So let us proceed to look at the allocation workings for the blending department, where it has 160 in terms of the number of orders. And again, we're going to divide that by the total number of orders, and we're going to multiply that by the cost that we're sharing. So for the allocation of warehouse workings, again, that is based on number of orders. We begin with blending. It is 160 divided by the total number of orders multiplied by the cost that we're sharing, which is $229,000. And this gives us $146,560 for the blending department. Let's make a note of that in our workings, $146,560. And then we're going to proceed to do the calculation for packing. But we have to go back to the question to get the details. Yes, for the packing department, there were 90 orders, and this 90 will be divided by the total order of 250, and we're going to multiply that by the 229,000. So let's look at that workings. Packing, 90 orders divided by the total number of 250 multiplied by the cost that we are sharing, which is 229,000, and this gives us $82,440. Let's record that in our workings. So under packing, as it relates to the allocation of the warehouse, we have $82,440. And bear in mind that the canteen did not get any of the cost from the warehouse because we are doing the step down. If it is that we had shared cost to the canteen, it means that we'll be carrying out the repeated distribution method. So let us now continue in completing this question, where we're going to wrap up by calculating the cost after allocation in the production departments. Blending, there was a costs after the adjustment, there was a cost of $993,000. To that, we had the allocated cost coming from the warehouse of $146,560, and this gives us a value of $1,139,550. We are now going to look at the cost after allocation in the packing department. After the adjusted balance, there is a value of $565,000 in the packing department. To that, we're adding the allocation coming from the warehouse of $82,440. And this gives us a total cost after allocation of $647,440. And guess what? As it relates to the canteen, remember, there is no cost in that because that cost was shared, was allocated to the other cost centers. The warehouse has no cost remaining in it. And once you're finished and you realize that there is no cost in the service departments and those costs now are in the production department, you would have successfully carried out the concept in sharing the costs to the production departments using the step-down allocation method. Now, people, remember, practice makes perfect, so be sure to attempt similar questions on your own to reinforce your learning. If you have any questions or need further clarification, feel free to leave a comment below. Good luck with your studies, and I'll see you in the next lesson. Thank you for joining today. Don't forget to like this video, subscribe to the channel for more valuable lessons, and hit the notification bell to stay updated with the latest content.
Like, share, and don't forget to subscribe.